I think if you were just mentioning about China, and this is a very bold policy step. In fact, a combination of policy steps yesterday. What we are noticing that is they are much more mindful about market signals. Particularly, they have been mentioning about the stock market, and there are these liquidity release, which would help confidence generally, but also for the equity market as well. I think this set up a path for them to potentially announce a 5% GDP target. And you need more steps in order to achieve that. And we want to see what other measures, particularly on the macro fundamental side, that could help to achieve that objective. In the market, I think there has been a lot of calls for them to do more on the demand side that can help the consumer, that can help the income of households. So that part we haven't seen much. And if that part comes in a pretty big magnitude, then I think the market can continue to see more recovery.
Yeah, I want you to talk to us a little bit more about the demand side, Stephen, because the moves that we've just outlined are on the supply side, and theoretically, in context, when you cut the triple R, basically you're giving banks more money that they could potentially lend, right? And in a command economy, the banks will do as instructed. Go forth and lend. They will go forth and lend. But if the demand is not there, what happens?
I think that's why we have seen the lending towards more on the infrastructure side or targeted industry, be it in the technology or green energy and other government-directed areas. The consumer side has been quite weak. There has been some after effects from the COVID period. There have been impact from weaker property prices, which created a negative wealth effect. And the housing part is still not really seeing much of any recovery. Overnight, we saw PBOC announcing some additional steps to help on the commercial real estate side, which we're still trying to work out details whether that would be beneficial for kind of developers that have business in both residential and commercial. But so far, if you look at data coming through from monthly transactions, the buying interest is still very much lacking. If you have no income, you have kind of somewhat pessimistic about the outlook so far. It's hard to stimulate that animal spirit. So again, some steps from the government would be helpful in this regard. I think they started to talk about it, but again, we need to see something quite concrete and where
Yes.
household can actually feel that impact coming through.
Stimulate the demand side, and that suggests some deeper fiscal action. Stephen, so am I right in saying that this policy action perhaps may not be enough to recommit to the China market and assets wholeheartedly and put money to work, and despite the fact the valuations look very compelling?
I think there are many different things that needs to be done, but this is certainly one step towards that. The market has been quite bearish or avoiding some of the China risk generally, be it in China high yield credits, or you can see it from the equity valuation. And we are getting to a point where I think the policymakers certainly are watching many of these indicators much more vigilantly. For example, yesterday, the PBOC announcement on triple R cut was actually done at a conference where they invited different type of investor, including foreign investor, to attend. So that attention, I think, is very helpful to us in telling us they are going to resuscitate confidence. And other steps, again, it's going to be needing a combination of things.
Yes.
But the market certainly is coming through from a very, very bearish stance, and this is helpful in putting a little bit of a floor, at least in the next couple of months.
Indeed.